Okay, so here we are, fourth and final question. We're only going to do parts A, B, and C on the video. D, E, and F are written. You have notes for those. So we'll dive straight into it. So Ashley, a shareholder from his company, takes out a loan from them on the 1st of June 2016. The company pays its corporation tax on the 1st of January each year. On the 1st of December, Ashley repays $30,000. On the 31st of March 2019, the company writes off the remaining $20,000 of Ashley's loan. Calculate the amount and date of any Section 455 loan advance tax payable by the company to HMRC. So, Section 455 tax on loan advances is paid depending on what balance is outstanding at the end of the year. If a company loans some money to an employee and they pay it back before the end of the year, there's nothing to do with it. It only takes place when there is balances at the end of the year which are still outstanding in the financial statements. So, at the end of the year in which the loan was taken out. So the loan was taken out on the 1st of June 2016. So 31st of March 17 is that year end. The amount outstanding is 50,000. Section 455 tax is 32.5%. So 32.5% of 50,000 is 16,250. Now, the year end is March. That means they will pay the corporation tax on the 1st of January. So they would pay their corporation tax on the 1st of January 2018. Whatever that bill is, they will also include 16,250 of Section 455 withholding tax sent along with it at the same rate. That's part A done. That's what they had to pay. Part B then says, well, can they have any of it back? So what happens is every year, at the year end from there, it is reassessed how much is outstanding on that loan. If the amount goes up, they pay more tax over. If the amount comes down, they have some tax back. So in part B, the next year end we come to is the 31st of March 18. Now, on the 1st of December 17, Ashley repaid 30,000 of the loan. So the amount outstanding at this point is 20,000. Now the Section 455 at that point should be 6,000 at 32.5% equals 6,500. So that's how much tax HMRC should be owning. But they don't. They have 16,250. So 16,250 minus 6,500 is 9,750 Section 455 tax, which they can claim back. And they can claim it back alongside their corporation tax payment. So what happens is the next time they have corporation tax due, which will be the 1st of January 19, they will reduce that payment by 9,750. They do not receive cash back from HMRC. If their corporation tax bill was 10,000, they would say to HMRC, our corporation tax bill is 10,000. You owe us 9,750 of Section 455 withholding tax. Therefore, we are only going to pay you £250. That's how it works. So they have had a refund because if you think about it, they would pay 10,000. They would get back 9,750. The net effect is still 250 anyway, so it just makes it easier for everybody. So we then move forward to the next year end. 31st of March 19. At this point, the outstanding balance is zero. It's been written off. So the Section 455 at 32.5% equals zero. So the £6,500 which HMRC are still holding, they must give back. So the next corporation tax on the 1st of January 2020 takes £6,500. At this point, there is zero outstanding in the loan in the financial statements. And by the time they've had this deduction, they have had back all of their 16,250. So that's all of it done. There is now no longer any loan. There is no reason for HMRC to have any money. They've had all the money back. They paid over 16,250, and there is no reason for them to still be holding on to everything. So the company has now finished their involvement with, my arm's not being funny, my dog's trying to bite my finger. They paid over 16,250 and then now had it back in 2 installments. At this point, the company is finished. Now, the third bit of the question says, how does this affect Ashley's income tax return? So the way it affects his income tax return is the interest that he saved in HMRC's eyes is a benefit. So if he had gone and taken that loan out of the bank, he'd have paid interest. It says in the question, this is an interest-free loan from his employer. So there is no reason for him, move. The interest which is saved by taking this loan out from the bank, from the company rather than the bank, is the benefit. HMRC, it tells us in the question, has a stated interest rate of 4%. So what they're saying is, if it was interest-free, he saved 4% because that's what it should have cost. And that 4% is what we charged as income in his income tax return. So what we say is, the loan was paid out in June 2016. So the first corporation tax year, income tax year, is 16-17. So at the end of that year, 50,000 times 4% is 2,000. So if he owed 50,000 for the whole year, the interest would be 2,000, but he didn't owe it for the whole year. The loan was taken out in June, so we didn't owe the money in April and May. So we did owe it for 10 months of the year. And that comes to 1250. So on his income tax return, he would record his income, and then I'm going to show you this. So my little dog, the one that was bugging me, is now annoyed because he's bored. So he's bugging the big one who is asleep. And he's doing that by trying to wake him up by jumping on it. So in this year, if he earned 40,000, he would put 40,000 income, benefit 1250, and his tax would be calculated as if he'd earned 41,250. Now we'll move on to the next tax year, 17-18. And in this year, at the start of the year, he owed 50,000. But he made a repayment, and he made a repayment in, let me see the exact date, December. So he owed 50,000 for April, May, June, July, August, September, October, November, because it was the 1st of December. So he only owed 50,000 for 8 months of the year, and that equals 12, 125. I've not written this down on my answer. I've done it a different way, so I'm calculating it. 4,000, 2,000, 5, 12, and 8. I've just found out my answer is wrong, so we need to scrub that. 50,000. 50,000 plus 4%. So the total of 2,000 divided by 12 times 10. This figure is 1667. And the 2,000 for 8 months is 1333. He then paid 30,000, so the amount he owed after that was 20,000. Which is 800 times 4 over 12, because we can only have them add up to 12. And that comes to 267. So the total that year is 1,600. Now, it does look strange that even though we've paid the chunk off, the interest is about the same. What we've got to remember is he didn't owe it for the whole year here. He did owe it for the whole year here. And then in the next tax year, he owed 20,000. And he owed that for the whole year because it was written off on the 31st of March, the last day of the year. So that was for 12 months he owed that figure. And then the 20,000 was written off. Now at that point, it moves from being a loan to being income. If a company gives you money and you give it back, it's a loan. If a company gives you money, you don't give it back, that is income, and income is taxable. So at this point, the whole 20,000 becomes income. So in that final year, actually he's recording 20,800. And at this point, everything has either been charged as income or repaid. That's why this is allowed to be written off. It's why we're allowed to get to this point here, because this is now recorded as income. Okay, that is that whole first part of the question. The second part on closed companies and the relationships of brothers and sisters and wives, I'm not going to do a video on because that's perfectly fine. So we're done.